So let me be very clear. There is a lot of confusion around SOFI stock. Basically, is SOFI a good stock to own, or is it terrible? When should you buy SOFI, if ever? Why I suck at YouTube, and a bunch of other stuff like that. So let's talk about all these questions and get you guys the truth on exactly what's going on with SOFI and all the confusion and everything else. Just make sure you like the video if you like getting the truth without the hype. All right, so in the comment section of my last video, their SOFI video, I've never seen the comments so divided about SOFI stock. I mean, there was a lot of confusion. There was a lot of just anger in some cases. There was a whole lot going on there. So I'll give you the real deal solution about everything that was being discussed there from a long-term buy and hold investor's perspective. And I'll let you know if I'm adding more SOFI stock or not. So number one, many are tired of holding this stock. All right, so there were a lot of you guys that posted that you've been a shareholder for this stock for 3 years now, maybe even more than that. And that tells me, and we're being honest here, guys, that you bought into the hype run 3 years ago. And I understand that that was a mistake. I understand that completely. It absolutely was. But on the flip side of that, you have had almost 2 years to absolutely average way down in the stock. And more importantly, you have to keep in mind when you're talking about long-term buy and hold investing, share count is what matters in the end. Not your average, not anything else. Share count is what matters in the end. And it is very, very hard to make one buy and have a huge share count in the stock, as opposed to over the course of 3 years, you can buy a whole lot of shares of a stock over the course of 3 years. I mean, unless you're just, Jeff Bezos or something like that, where you can just dump billions of dollars of Amazon shares and then buy up, stocks that you want to buy or whatever the case is. Most of us don't have access to capital like that. So being able to build out a position over the course of 3 years, when in the end, over the long run, share count is what matters. Having 3 years to average down and build out a position in the stock is actually exactly what you want as a long-term buy and hold investor. Because even if you started during the hype run and you made a mistake, every single buy is an average down as we move on from there, all the way through the downturn, and all the way now we're hopefully getting back on an upswing here at some point in time. Definitely on an upswing from the $4 range that we were in, a year and a half ago or so. But share count is what matters. And let me just illustrate it with basic math. Would you rather own 10,000 shares of SOFI at an $8 average, or would you rather own 1,000 shares of SOFI with a $5 or $6 average? Now, the next piece of that equation you need to include is, let's say it goes to $15 in the future or $20 in the future. Wherever you see the stock in 5 years, let's say it gets to that mark. Again, would you rather own 10,000 shares at $8 per share? Or would you rather own 1,000 shares at the $5 or $6 mark? I know exactly which one I would choose because I would be a lot wealthier with the higher share count. And that's just short term here. Think about your investing career. I mean, if you're 40 years old right now, you've got another 40 years worth of investing to go there. So where is SOFI at in 40 years? How does your share count look then? If SOFI executes and it becomes one of the big dogs like it's possible, I'm not saying it'll get there. I have no idea. I can't see that far into the future. You can't see beyond 2 years. But if it does, boy, you sure will be glad that you bought as many shares that you could and had as many years as you had to add shares at cheap, cheap prices. Now, another question to consider is if you're a newer investor or you're just starting a portfolio, whatever the case is, and you wanted to grow that portfolio as fast as possible, would SOFI be a stock that you would add and want to have in order to basically make that portfolio go up as fast as possible? Well, the next round of buys are going down this Friday in my $250 Legacy Portfolio Challenge, where for just $15, you can see me build that completely out and see if SOFI is one of those stocks or not that I would add in that particular scenario. Those spots are very limited and they're going fast, where I basically started at zero and I'm going to build a portfolio just using $250 a week into a 6-figure and beyond portfolio. The spots for that $15 founders tier are limited, so make sure you get yours before they're all gone. And if you want a full membership, because you want to see all of my buy and sell alerts in real time, including our expert investors who are also taking the $250 challenge with us, and they're kicking my butt right now, by the way. If you want to be able to see theirs as well, see my complete watch list with price targets, get the free coaching, take all the courses, all that stuff like that, make sure you check out the pinned comment down there and see which membership is right for you before they expire or before the sale price goes back up. So number two, the share price is going nowhere. Now, a lot of folks I know are frustrated because all the bull arguments, all the things that needed to happen for the bull thesis to play out have happened. A lot of them have already happened. We got profitability. We have great guidance. We have improved guidance, basically beat and raise in terms of guidance. And the stock price is still going nowhere. That is true, but for high growth companies or good growth companies that just turn profitable, it is not normal to see them going to the moon immediately once they start hitting targets. That's not normal. And if your reference point is, well, in 2020 or in 2021, during those type times, that's exactly what happened. that is not the right time to look at. That was the tippy top of the frothy part of the longest bull run in the history of the stock market. That is not normally how it works. Normally how it works is exactly how this is playing out so far. Using really anything in 2021 other than a lesson learned, but having that as an expectation of what should happen to your stocks is unfortunately kind of fool's gold per se, and it's not the right way to look at it. Although I love the setup that we're getting right now. The best example is Palantir. After they turned profitable, got a nice run up, and then Wall Street just beat it back down again into oblivion once again. The comments in my comment section after that happened are almost identical. Everybody was either, this stock sucks, I'm selling, I sold and took my loss, as soon as I break even, I'm getting out of this crap stock. All those sort of things like that were exactly the same. Hadn't gone anywhere in years. I'm tired of it. All the same things that I'm seeing right now and the same frustrations and the same strategies that people are implementing are almost identical. And then guess what? The stock magically tripled basically in a year. That is what happens with great stocks. They only get ignored for so long. I don't know how long SOFI will get ignored, just like I didn't know how long Palantir would be ignored, but I just continue to add shares because, like point number one, share count is what matters in the end, and so I just stuck with it. As long as the business is executing underneath wonderfully, and you hear that in the earnings, I don't have any reason to believe that eventually it will come around. And for those of you that were asking, there is no bicep flex necessary for that. Number three, hindsight always wins. People swear up and down, especially in scenarios like these, that, oh man, I should have just sold and bought this instead. I would have done so much better. But that's actually false because you didn't do that in the first place. And you're looking back and looking at the answer to the test. Something kept you from pulling the trigger way back then. That was the reality of what you would have done during that time frame, because that's exactly what you did. Don't blame me. Don't blame other YouTubers. Don't blame whatever the heck else is out there. That's the facts that you're looking at there. And this is very common. I heard the same exact thing with Palantir with a lot of those folks that sold. And I don't know, I'd love to know those folks that sold Palantir at those lows. What did you buy and did it outperform Palantir? I mean, did you go put that money into NVIDIA? Then you might have outperformed Palantir, but I wonder how many folks actually did that and actually pulled the trigger on something else like NVIDIA. Everyone can see the wins and can look smart when you're looking back in hindsight, but that's not the reality of what actually happened or what would have happened if you could go back and change it again, because you already have the answer to the test, which means if you would have changed something, the answer to the test might have changed as well. So looking back at scenarios where you didn't do something is not an indication of what your performance would have been either. It's not true. And I know this happens because when you've been around long enough like I had, especially in investing and with investments and everything else as long as I have, you know a lot of people who over the course of 20-something years have always said, oh, I should have done this. Oh, I would have done that. Oh, next time I'm going to do this. And they're the same exact folks that I still hear today. Oh man, I should have invested after the tech bubble popped. Oh man, I should have invested after the financial crisis. Oh, I should have bought real estate, whenever it all tanked. Oh, I was going to start this e-commerce business before everybody had an e-commerce business, so I'd be a multimillionaire today or a billionaire today if I just would have done it. You don't want to be that guy always saying I woulda, shoulda, coulda. Hindsight always wins, and it gives you a false sense of being okay with what's happening right now. Looking back is only helpful to learn lessons, apply it, and move forward, not lament what you could have done. Number four, SOFI is fintech, right? Just because an article calls it fintech, that means absolutely nothing. Just because a YouTuber calls it fintech means absolutely nothing. Just because of a lot of different things like that, it means nothing. Wall Street determines, in terms of multiple paid, whether or not it's fintech or not. We can categorize it fintech for the rest of our lives. And if Wall Street decides to give it a banking multiple, that's what we're going to get. That is the reality and the truth about the stock market. Taking loans, taking deposits, and offering banking services is banking at its very core, at its very definition. If those become what derives, and I'm talking over the next couple of years here, if those become what derives the vast majority of the revenue and the profits, it is by very definition going to be categorized as a bank. That is the truth. Just simply because SOFI does a lot of things that actually fit into the actual fintech definition does not make it a fintech company in the end, because the bottom line becomes, where is the money derived from? If the tech platforms start outpacing the banking segment of the particular company, you're right, we're going to get more of a fintech multiple, and the more skewed that gets, the better the multiple gets for us, because it will skew more and more towards the fintech. But the exact opposite applies as well. If the banking continues to grow like it is, and the other, technology segments do not catch up and start getting there, it's going to go the opposite direction and you're going to get much more of a banking multiple. Heck, there can just be enough big institutional investors on Wall Street who says, hey, if you got a bank charter, you are a bank and we're going to value you as such. And there's nothing you can do, even if fintech dominates the financials. If they decide to do that, which I don't think they're going to, I'm just giving you guys an extreme example here of how much they control it versus we control it. But that could absolutely happen. And hey, guess what? SoFi is a bank charter. Therefore, if that's the logic they choose to use in order to value it, that is what they're going to be willing to pay for it. Now, as a long-term investor, I am focused on how the financials break out in regards to this question. I'm paying attention to the revenue and profits derived from the banking versus the technology side of the business. That right there is what I'm focusing on because that's the piece that I can control. Or that I can see, that I can tangibly make assumptions on. I cannot make assumptions on what Wall Street's going to do, and I definitely cannot make assumptions upon whether or not they're looking at the technical definition of this or that and then applying their multiples accordingly. Well, I don't think they're doing that, and more importantly, all I need to worry about is how those numbers are moving so then I can adjust my valuation accordingly to kind of match up with that. That gives me the closest answer to what Wall Street may do in the future, but remember, it's not guaranteed because it's not clearly defined, and that is why I list it as a risk factor in a lot of my videos. A lot of folks hate me for it, they blast me for it, but I'm trying to give you guys the truth here. That's why I list it as a actual risk factor because it is a risk factor. Number 5, 10% drop after earnings is too much. All right, here's the truth with this one, guys. The earnings were really good. You guys know that. I said that. I really enjoyed them. But I have seen better earnings, better guidance, better everything take a far larger beat down than 10%. So it is not out of the realm of possibility at all or too much or anything else like that. There's actually several reasons for it, but this happens all the time in regards to earnings on Wall Street. And it's actually happened to SoFi before in the past in regards to their earnings. So many unusual factors come into earnings. And remember this, stocks are never more manipulated than they are around earnings. Earnings movements a lot of times make absolutely no sense at all whatsoever. Kind of think of it this way. It's a trader controlled stock. It's coming into earnings, which we know stocks are never more manipulated than they are around earnings. And a 10% drop in earnings is surprising. Those of us that have been around for a while, it's not surprising at all. It's just Wall Street games and Wall Street traders playing trader games with the stock. This is not unusual at all. And ask any Tesla shareholder who's been a shareholder since, basically 2020, 2021 and forward about these wild rides with earnings and incredible earnings and 20% beat downs and vice versa. I don't know. It's all over the map there. Talk to those shareholders there. They'll tell you the same exact thing. So will I be adding more SoFi or not is the last question we're going to answer today. Now, in regards to the portfolio challenge where I'm building out that portfolio from scratch and my strategy is completely different there than it is my other portfolios over here that I have. I'm treating it like a completely different scenario, like I have nothing else. I got nothing else over here. This all just doesn't exist. Real estate, other companies, everything else doesn't exist. Pretending like I'm starting off from scratch here. That strategy is a little bit different and I won't make those buys until Friday. So, those of you guys that are in there, you'll see it on Friday. I don't want to reveal it here ahead of time. But in regards to my main portfolios over here, I liked everything that I heard on the earnings. And remember, share count is what matters in the end. So yes, I added at my price target at 669. And basically I'm going to reassess again. And if Wall Street wants to continue to get dumb, I'll continue to add bonus shares as we continue to have. I think next quarter is going to be great as well. And if they want to keep it beaten down for longer, I'll continue to add to this stock. And if you want to see my new price targets for SoFi and all the buys there in real time and be able to take advantage of the portfolio challenge and see not only my buys, but our super investor buys as well, where they're kicking my butt right now, make sure you check out the pinned comment down there and see if a membership's right for you. If you want to take the $250 challenge with me, take advantage of that $15 tier, or become a full member where you get access to all the courses, the coaching, the 6, 7, and 8-figure Discord, our stock analyzer tool completely for free. There's just so much, guys. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.